Sam Lessin is general partner over at Slow Ventures. And Sam, the headlines have been fast and furious, but maybe they have fed a little bit more of this incremental caution around the AI trade overall. From an investor perspective, is the slight pullback that we've seen relative to the massive run-up justified?
Look, in the end of the day, I want to be clear. I think what's going on in AI is quite interesting, and there is a lot that can be real about it. There's no question that there has been a fast and furious game across the AI sector of this kind of, setting expectations at infinity. And I think there's a reality that, the U.S. wants to grow much faster than it has been. We need hopes and dreams. And so there's been kind of a lot of encouragement along the way to create a story and a narrative that pulls in a ton of capital, a ton of infrastructure, a ton of development to spur growth. And so there's a lot of, people with aligned incentives here. When you see things like, though, OpenAI kind of flipping the story, and again, I think clearly in a faux pas, saying something they shouldn't have said, which is they're looking for a government backstop. I think people's fears get raised that there is a game being played of too big to fail, where people are saying, hey, how quickly can we get everyone on our side and get everyone aligned and get hands all tied together and say, we're all in this together, so clearly we're going to keep driving it.
So we're all in this together was something that we all went through during the great financial crisis in 2007 to 2010, and there was ultimately a government backstop. The numbers that we're talking about for AI projected for the next 5 to 10 years are making the great financial crisis kind of economic impact maybe on par with what we could be seeing from the AI trade. So is too big to fail something the government needs to even think about at this point?
I mean, I think the answer is yes. The government should be thinking about it. But it is one of those things where here's the problem. We have an enormous debt crisis at the federal level. The only way we're going to get out of that is two things. One is we're going to inflate the currency, right? And two is we need to somehow get GDP growth way higher than it's been historically. What narrative can possibly support that? Well, Sam Altman, LLMs, AI has slotted in beautifully to, I think, a national issue, which is we have to figure out how to get GDP growth up. And we're pinning a lot of hopes on that narrative. So when you see these types of things, where all of a sudden, Wall Street's in the game, the Middle East's in the game, everyone's pulled into the game of how do we spur a lot of growth all on this one story, which is LLMs and AI, you understand how quickly you yada, yada, yada your way into, and the government should backstop it, right? And so, look, I think it's very dangerous. I think it's socially very dangerous. People remember 2008. They remember the financial crisis. And I think people's biggest concerns at a social level is that we're seeing massive inequality growth. We're seeing, the story of Musk's $1 trillion pay package. And what the average American, I think, is quite worried about is, oh my God, once again, we're going to pay for all this so that a small number of technologists get extremely wealthy. So I think we have to be super careful. The fact that these comments got so magnified and projected, it became such a hot button, I think is really a sign of the times. There's a much bigger social context going on here. But from my perspective, historically, the technology industry has done amazing things in its own little corner in a very competitive market where you say, look, there are big winners, but they're fair winners. They're winners that played it out. The second the technology industry starts looking for bailouts or stories or this kind of we're all in this together narrative, we get into a very socially sticky place.
Sam, one final point here. Just before the, COVID pandemic, call it maybe 2018, 2019, when we talked about artificial intelligence, it was more of a frontier type investing environment. It was not mainstream at all. It is anything but frontier right now. It's very front of mind. How does that change a venture capitalist or private equity investor's view of just how, particular they have to be with regard to how they invest money within AI?
Well, in general, the story I think of, when you take high risk investments that all of a sudden seem not so high risk because everyone else is doing them, that's usually a recipe for failure and for disaster. And I think that's kind of the place we're in right now, where there's been such we've gone from such a contrarian narrative to a mainstream narrative so quickly. It's been quite easy to write increasingly enormous checks into this stuff. I think you got to be careful about where you end up on this. It doesn't mean that AI isn't valuable. It doesn't mean there aren't opportunities for it. I actually think at this point, if you're starting a company or building something and you're not using AI, that's crazy. Obviously you want to use that. That doesn't necessarily translate into the 7% or even 4% GDP growth everyone wants and is pushing for and trying to kind of push in the same direction of, nor is it kind of aligned with the level or magnitude of investment necessarily being made right now.